Hi there, everybody. This is Damon, and on behalf of your team here at ChappelWood Financial Services, I want to follow up on an email message that you received from Shelley yesterday. It had a link to a video from one of our strategists that serves high net worth families such as yourself. And we hope that you've had a chance to take a look at that video. It's less than 3 minutes long. It gives a lot of perspective on how we are reacting to what's happening in the market right now. Volatility, that sort of thing, and specifically how it relates to your accounts. It's the how that you've seen. Now we want to share 3 reasons why we are reacting the way that we are, so that you can have some confidence in what's going on with your accounts right now. Number 1, keep in mind you have a plan. It's not a haphazard point and shoot. You actually have a real plan. Your overall investment strategy is tied to an investment policy statement, or what we call an IPS. This IPS is very important because it dictates to us how we are to invest your money over the long term based on the strategies and the objectives and goals and risk tolerance that you have told us are important to you. It also helps dictate a range, percentage range of stocks and bonds that we can own in your portfolio to achieve your specific result. Everybody is different. Some people want income, some people want growth. The point is that in your portfolio, so long as your range of assets and stocks and bonds, because remember, you have an actively managed account with individual securities in them, so long as we are within the ranges established by your investment policy statement and dictated by your objectives and your risk tolerance, there's no need to make major wholesale changes to your portfolio. Also, remember that many of our clients have money protected from volatility. It's not in the stock market. There are other strategies that we use. And so if market volatility is something you're concerned about and you don't yet have money protected, and we can certainly remind you of whether or not you have money protected, that's something that we can talk about in your next strategy review, your next quarterly strategy review that's going to be coming up in May. And one thing to point out is that interest rates on those protection strategies have gone up. So it might be a time now to consider protecting some money if you haven't done so already. Number 2, keep in mind, volatility is normal. Volatility is definitely increased, though it's actually returned to a more normal state. What we saw in 2017 was completely abnormal. The low volatility we saw, that was not normal, but it lulled investors into believing that it was. The challenge for the market right now is that it doesn't know what to expect on a day-to-day basis. It's kind of trying to figure its way out. That's why you see the wild ups and downs of the market. It's being attacked on different sides with tariffs. You've got rising inflation, potentially inflation fears. You've got political chaos around the world. The market doesn't like that. The market likes nice and easy, just like we all do. So until we have a more definitive idea and insight into how the tariffs are going to impact the overall market, impact trade, you can expect the market to kind of throw a little temper tantrum until it decides and figures out what's going to happen. However, we want to let you know we are not living and dying with the daily movements of the market, and we don't recommend that you do that either. That's not healthy for anybody, and it's really not what you're in this for. Remember, you joined our family because you didn't want to be like everybody else who's reacting to the daily movements, trying to time the market. If you're buying and selling right now, that's fine if you've got your own money that you're doing that. But just keep in mind, in your accounts, we're not buying and selling just based upon daily movements of the market. We're buying and selling based upon your logical, well thought out plan that was established in your investment policy statement and based on your objectives and risk tolerance. Number 3, the market and economy are still very strong. Unemployment is nearing 3.6%. That's a low rate that we haven't seen in nearly 50 years, since 1969. Inflation remains under 2%. The Fed continues revising its estimates for economic growth upward, and thereby they continue to raise rates. These are actually positive signs when rates go up because the Fed believes that the economy is strong enough to absorb it. Corporate earnings are going to continue to grow this year due to tax savings, to the tax reform. Consumer confidence is still very, very high. Virtually every major economic indicator that we track is trending in a positive direction. The ones that are not, well, political turmoil, political is still there, geopolitical risk is still very high. But of 20 or so economic indicators that we track, 17 or 18 of them are in positive territory. So what this means is that the economy, the market, is still very strong. We still have a lot of confidence that we're going to end the year on a positive note. The solid companies that you owned in your portfolio yesterday are still solid. Just because the market goes down 1% doesn't mean that those companies suddenly became bad. If anything, their outlook is going to improve because their earnings are going to go up. And when earnings go up, stock prices tend to follow. So that's not a reason to dump a particular stock or bond because of the daily fluctuations of the market. Now, if a company misses its dividend payment, if a bond misses its coupon payment, if a particular company just doesn't meet our overall objective anymore, well then yes, we will sell it. But we're not going to sell something, we're not going to make wholesale changes or recommend wholesale changes to your portfolio because of daily movements in the market. It's not a healthy way to invest, and it's a really good way to lose more money in the long term. So we want you to know that we understand how frustrating it can be in times like this. Remember, we're investors too. Me, Victoria, Shelley, all of us here at ChappelWood, we're investing right alongside with you. We don't like volatility either, but we know that it's normal, and what we're seeing right now is nothing to be afraid of. We are not afraid. We are constantly monitoring your accounts, and if the time comes for us to make and recommend and make a change, we promise you we will bring that to you rather than you having to come to us. So thank you so much for the faith that you have placed in us, and thank you for giving us the opportunity to serve you as your primary financial advisor. We'll keep in touch, and we'll see you again here in May for your quarterly strategy review. We're looking forward to it.